Will this volatility lead to the equity rally being overthrown?
No, we don't think so. The inflation numbers could certainly stay elevated for quite some time. We're seeing inflation prints that we haven't seen in decades. But we think that as the global supply chain issues resolve themselves, corporate earnings continue to be strong, the consumer is in good shape, the Federal Reserve will be very patient, and we think that the equity rally can continue. But we think that inflation is transitory as well.
How long will consumers be healthy, given that we have seen now their sentiment plunging, prices rising? They're not really confident about what's happening, as this GTV chart on the Bloomberg shows. It was really surprising to see those numbers from the University of Michigan last week.
Well, I think that, again, as the global supply chain issues start to resolve themselves, I think prices will come down, and that could certainly spur back the confidence that the consumer has. The consumer still is in relatively good shape, and I think that those confidence numbers could resume once the supply chain issues are resolved.
Terri, which sectors do you think still has pretty good runway to grow?
Well, with the expectation that interest rates rise, we think that financials will do well. We think that mid-caps will do well. But most importantly, we think that companies that have pricing power will do very well, and companies that will struggle will probably the consumer staple areas, because they don't have the pricing powers issues that other companies have. But also the areas where companies are exposed to the reopening trade, we think will do quite well. But broadly, this is a good market for equities.
When you take a look at earnings expectations, though, they will have to be more muted going forward?
Well, earnings this year have exceeded expectations as we thought. We've had double-digit corporate profits. Certainly the year-over-year growth for next year will probably not be as high, but the growth will certainly be there. We're looking for growth in the high single digits for next year, and we think that earnings can continue to grow going forward. So this is not a story that that growth is over. It's not, and we think that the equity rally can continue. Although yes, the growth expectations on a year-over-year basis will be slightly less.
Is there further runway when it comes to tech, though?
Well, tech is about 28% of the S&P 500. So tech is not a story that's going away. The growth is still there. Tech is what brought us out of this pandemic, and tech is certainly, I think, a strong part of a portfolio going forward. Tech still has a lot of growth ahead of it.
How do you balance that with reopening trades, especially into financials and energy stocks?
Well, we think the financials and the energy stocks, broadly, the cyclicals will do well in this environment going forward. But again, it's all about balancing risk in a portfolio for clients going forward. And we have clients, we want clients to be mindful of that risk, especially in a growth that is muted, perhaps going forward. But again, the story is strong corporate earnings, a very accommodative Fed, and a consumer that's in very good shape. The growth story is not over, and the equity market continues its rally.